Yo guys, what is going on, man? It's been a while, guys. I have not done this class or a class in general and I don't even know how long, guys, but welcome back, everyone. Here, in the meantime, as you guys are joining, obviously I just started it. But here, let me go ahead and put it out here in the server real quick. That I'm live. Make sure free trading class. Okay, we are good. Alright, guys, welcome, 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 welcome. Now, for those from my Discord that are joining in, from the from the Discord, of course, I'm gonna be doing this class in both a Discord server and on YouTube, so both of you guys can get the same the same value of content, the best of both worlds, pretty much. All right. But here, speaking of Discord, let me go ahead and start over in that cord. So give me 1 second. Let me go ahead and do this real quick. Start. Start. Okay. Make sure everything's looking good here. There we go. Okay. Yo, what's going on, guys? What's up? What's up? What's up? What's up, guys? Let me know if you guys can hear me if you guys can hear me in the chat. By the way, if not, I'll just rejoin. Um, but yeah, you guys let me know on that. All right, let me make sure. Yo, what's up, YouTube? What's going on, guys? What's up? What's up? What's up? In the meantime, here, let me rejoin just in case. Hold up. Let me see. Okay, bet. There you go. All right, what's up, guys? What's going on? What's going on? What's going on? Here, let me add everyone in this server as well, so everyone can get the best of both worlds, and we'll get this started. All right. There we go. All right. So what's going on, guys? As you guys join, so guys, in today's class, I know I haven't done it in a long time. I'm talking what, 2 months since I last did a class. And I know you guys have been used to really enjoy it. I kind of stopped it just because I got really busy, like really busy, with some other stuff. But now that I'm finding some free time and all that good stuff, I'm back to kind of teach you guys everything I know about trading. You know what I mean? Just guiding you guys through my strategy. I'm sure most of you guys know me. If you guys don't know me, my name is David. And I have a pretty consistent strategy, as so you guys might say. All right. Um, Let me see. Anyways, all right. So let me see. Thanks for hosting. How long will this run? I mean, bro, I can do it pretty much whenever, you know. But anyways, guys, all right. So let's get started. All right. So pretty much the way I kind of want to do this for today is I want to kind of, I know a lot of you guys might be new to the server or to the live or to my strategy or to my trading in general. So I kind of want to break down my entire strategy, or kind of summarize it, or break it down as simple as I can. And as we go, obviously you guys can always ask questions both on Discord and on YouTube. I'll have both of the chats open. And then as we go, I'm answering you guys' questions and helping you guys out. And then after we go through the explanation of the strategy and all that stuff, what's it called? I'm going to do some trade recaps on. If you guys don't know, I just got out of my third 1 month winning streak in the last like 4 months. So there's definitely some trades that I do want to break down to kind of help you guys further understand the strategy, how it works, how I trade it, what I look for every day, and all that good stuff. All right, guys. By the way, everyone that's joining up, guys, welcome. All right. Will this be recorded? Yeah, it is being recorded right now. If you guys ever need the link or whatever, just save it right here. All right. But anyways, all right. Let's go ahead and get started. My bad for talking so much. It's just that's how I am. All right. Anyways, guys. So for my OGs in here that have been with me for more than 2 months, at least more than 2 months. All right. Are these lessons going to be every Friday? No, I mean, if I could do them every day, I would. I just found some free time today, so I might as well. Hey, what's up, Viv? What's going on, guys, on YouTube? All right, so guys, to start the strategy, I know a lot of you guys might be some OGs that might know my strategy and all that stuff. So, guys, first things first, I'm gonna ask you guys one question. All right, what are the 4 things that we always look for when we start charting? Pretty much the 4 things that we always look for in the strategy. It's pretty simple, right? For the people in my premium, I'm sure you guys know it. I mean, we do it every day. But for the people that haven't traded in a while, let me know if you guys know it. You know. Okay, so number one, liquidity. Okay, well that's one of them. Let me see. Open highs. No, not open highs and lows. That's one of them. That's DOL. Right, there it is. So fair value gap, drawn liquidity, MSS. Right, but you're missing one thing, and that's gonna be the bias, the trends. Exactly. So trend, drawn liquidity, MSS, and fair value gaps. Now, for the new people in here, I know it might be like we're talking Chinese, but it'll make sense in a few minutes. I'm gonna break everything down. All right, guys. So yeah, when it comes to trading my strategy, and being able to know exactly what's gonna happen in the market, when it's gonna happen, and all that good stuff, you guys need to be able to kind of understand all of this. All right, guys. So number one being the trend, right? I'm gonna break down literally everything that what it means, how to find it, and all that stuff, right? Because obviously I could tell you guys, oh yeah, guys, a trend is when the market is going up. A trend is when the market is going down, like that. But no, there's certain ways to be really able to identify the trend, draw liquidity, and all that stuff. All right, so let's go ahead and get started with that. So guys, the number one thing that we look for, right? The number one thing that we look for when we're looking to trade in the market, before we take anything, can you use this in options? Yeah, of course, you can use this in any market, any single market in out there. But yeah, the first thing we look for, guys, is the trend, right? There's four things. This is the trend. Number two being drawn liquidity, DOL. Number three being MSS, and number four being fair value gaps and IFEGs. Like I said, to the average new person coming into trading, it might look like we're talking Chinese or something, but it'll make a lot of sense. It's actually way easier than you guys think. We're gonna go ahead and get started with the trend, right? And like I said, when it comes to looking for trends, I could be I could be the one person that's like, hey, yeah, a trend is when the market is going up, a trend is when the market is going down. No, but there's a lot more to a trend that's really easy to identify. But let me show you guys. All right, so I'm gonna put this over like up here. Let me delete all of this just so you guys don't have all this stuff on the chart. All right, but all right. So number one being the trend. How do we find the trend? I'm gonna go ahead and ask you guys to see if you guys actually know what a trend consists of. It's like what, like two things really. So if you guys know the answer, I mean, you guys can always type it in the chat. If you guys don't know, then you don't have to type anything. I'm gonna say in a few seconds. But let me know if you guys just so I know how you guys are kind of understanding this, right? And the trend is the easiest thing that that's part of the strategy. I mean, you need to know what a trend is in general, strategy or not. All right. But when it comes to a trend in the market, like what are the it's like 2 or 4 things that you guys look for, right? Let me see if you guys know the general movement. No, well, obviously that's what a trend is. Yeah. But okay, look here, right? So let's say, for example, the market trend is bullish. The market, yeah, exactly, higher highs and higher lows. That's what I was waiting for. All right. So yeah, let's say, for example, the market is bullish, and obviously, when the market is in a bullish or bearish trend, the market is not only gonna be going up. It's not how it works, unfortunately. It's just in a steady trend to the upside, right? It's steadily going up. So what I mean by this is the market looks like this, right? Where the market's creating new highs every single time, right? So in this case, this will be known as, for those that don't know, this is known as a bullish trend, right? This right here is known as a bullish trend. Why is that? Well, guys, when the market goes up, when the market is steadily going up, this is known as a bullish trend. When the market is steadily going down, this is known as a bearish trend, like a bear, So yeah, now, how are you guys able to identify this? Well, there's 2 terms that you guys need to know when you guys are identifying a trend before you guys are actually able to read the market coming into the strategy, right? And that being right here, higher highs and higher lows, right? So for example, right here, you guys can see that the trend ended up starting right down here, right? Where the market created the main low, right? And the market also created the main high up here, the main high, right? Now, you guys can see the market went up into the main high, pulled back, created a higher low than the previous low, right? So right here, the main low, this new low that we created right here is a higher low, right? It's obviously higher than the previous low, right? So we're gonna mark this out as, let me put it right here, the higher low, right? And the market is constantly creating these higher lows, which confirms a very nice bullish trend. It's as simple as that. All right, guys. So it will be like this, and like this, and then same thing goes with the higher high, right? A higher high would be the main high created right here, right? We created a new one right here. Obviously, it's a higher high than the previous high, the main high, right? So what the market is doing right here is we're creating a higher. See if I can write right here. Higher high. We created another one right here and right here, right? So the market, when you guys see that the market is making this pattern right here, this is known as an obvious bullish trend. And then same thing goes to the downside, right? So step 1 to the strategy is really simple. I mean, it's just being able to identify what the market is doing, right? You guys need to know what the market is doing. If not, you can't really read what it's gonna do in the future, right? And then same example goes. I'm gonna go ahead and just delete all of this. Let me see. Let me delete all of. I didn't even remember putting this many lines. Okay, so now For example, the market is in a steady downtrend, right? A bearish trend, right? The market created the main high, market created the main low, the market pulled up, created a lower high, right? The main high, this high is lower than the previous high, and so on, right? So the market is constantly creating a bearish trend, right? Lower high, lower low, right? So honestly, I don't want to get caught up in this topic way too much because I know it's kind of boring. You guys that probably know what a trend is. I'm sure everyone knows what it is, but just so you guys know the term what a higher high and a higher low is, that's exactly what you guys should be looking for. All right. Now I'm getting a question here on YouTube saying, what time frame do you suggest to check a trend? All right. It's actually really simple, right? I get asked this a lot, and it's really, really common sense, or kind of common sense, right? So you guys know, for the people in my premium or in this premium, you guys know that when I'm charting and I'm looking for trades for the day, you guys, I can't hear you. I think it's fixed now. There you go. Yeah, it's fixed. Okay, I just had to refresh it. My bad on that. But here, let me go ahead and show you guys a clear example. All right. So let me go ahead and do this. Let me see. Which time frames do I say? Okay, for me personally, I like using the 5 and 15 minute time frame are the best time frames to find entries because the candles, you can see a lot deeper into the candle that everything happens quick, right? In the market, you got to be quick always, right? But to find the bias in the market and to be able to find a trend, a clear trend and everything, I would suggest you guys use the 30-minute time frame, the 1 hour time frame, and possibly the 4 hour. But I don't really use the 4 hour time frame all that much. I usually just use the 30-minute and 1 hour time frame. All right. So, for example, right, if we go on the higher time frame for today, right, you guys see right here, obviously the market is in a very bearish time frame, right? I mean, not time frame, very, very bearish trend. Why is that? Well, the reason I say that is because the market is creating the main high, lower high, the main high, main low, lower high, lower low, constantly, right? The market is constantly getting pullbacks, but going even lower every single pullback. Right, so guys, if you guys want to write this down, for entries, we're gonna use the 5 and 15 minute time frame. Right, for the bias to find the trend in the market, I would suggest you guys use the 30-minute to 1 hour time frame. Right, so keep this in mind. All right, just peep this, guys. Right, so on the 5-minute time frame, for example, the market looks very, very choppy, which obviously we don't trade. That's why I didn't take any trades today, for those wondering. Right, the market looks very, 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 very choppy. Right, so the job of a higher time frame is to filter out this chop and give you one candle that tells you the whole story, right? So when you guys are charting overnight or the day of, whatever, before you guys are going to take a trade, I will always suggest you guys to start on the higher time frame and progress to the lower time frame as you guys are finding your trend and drawing liquidity, which I will get to in a second, right? So keep in mind, on the 5-minute time frame, looks very ugly. If you go over to the 1 hour time frame, you see what I mean? Like you're able to identify more of what's happening in the market because there's not as many useless candles that won't tell you what's going on, right? The 1 hour candle or the time frame is gonna filter out all of them, put it all into one candle, and tell you the story in one candle, which is what we need. There's no point. Trading is already hard as it is. There's no point of making it harder by not being able to identify the trend on the higher time frame. All right. So yeah. Once again, if you guys want to write it down, if you guys need it to be clear or whatever, I always say use the 5 and 15-minute time frame for entries, which is why when I put out trades in the alerting channel, you guys might realize that all of my trades are based off mainly the 5-minute, sometimes the 15-minute, but never anything above. All right. So yeah. Now that we're able to identify the trend, that, like I said, it was the easiest part out of all of them. Right. We're gonna move on to drawn liquidity, or DOL. Right. Now, like I said, DOL, you guys might not know what it stands for or what it is, but it is one of, if not the most important thing in the strategy. You guys need to know what drawn liquidity is. So make sure you guys are paying attention, all right? You don't look at the 1 minute time frame? No. Too much is going on in the 1 minute. It's not too stable, bro. In my opinion, I can't with the 1 minute. It's too much. Will it be recorded? Yeah, it is. Here. If anything, here it is, bro. Here it is. Here. Let me see. Okay. So, alright guys, let's go ahead and move on to DOL, alright? Now, let's say for example, right, we just got out of the topic of trends, right? So, why do I put trend as the number one thing? Well, before we're able to find drawn liquidity or anything in the market, we need to make sure that the trend is there, right? If there's no trend, we're not going to get a trade for the day, right? So, let's say for example, the market is currently in a very nice bullish trend, right? Obviously, it's steadily going up, right? Creating higher highs and higher lows, right? When the market is on its way up, right? Let me see. The 1 minute is good if price is moving clean. Yeah, but it's, in my opinion, still too much going on. I prefer the 5 minute. It's so much better, right? But it's all preference. I mean, if you guys can make money off the 1 minute, so be it. You know, who am I to tell you not to? You know. Anyways, right, guys. So let's say, for example, the market trend is in a very, very nice bullish trend. Let me make a cleaner chart here. Let me see. So, you know, we got a big push up, got an even bigger push up right here. All right. So when we're finding drawn liquidity in the market, it's as simple as just identifying. Guys, it's as simple as identifying the lows on a bullish trend and the highs on a bearish trend. I'm gonna make it as simple as I can. I'm not gonna give you guys some BS words. You guys like, oh, like guys, you have to look for this. You have to do math here. No, no. To find drawn liquidity, you're simply just marking out the highs and lows of the market depending on the trend, right? So I'm gonna give you guys two trends here: a bullish trend and a very nice bearish trend, just like this, right? So guys, when you're finding drawn liquidity, it's as simple as marking out, in a bullish trend, you're marking out the lows like this and like this. In a bearish trend, you're marking out the main high like this, and like this. It's that simple. It's really that simple. Now, what does this have to do with DOL? How can I use it to my advantage? How is one line gonna tell me exactly what the market is gonna do, and how do I know what the market is gonna do? All right, peep this, guys. Right. So you guys know my concept. For those that do know, my concept revolves around trading with the banks and not retail traders. Right. Okay. Now, let's say, for example, the market is pushing up like crazy. Let's say that it's, you know, for example, the election day, right? Trump won, everyone loved it. The markets were going crazy, right? The markets were only getting bought up, right? So the markets are in a very bullish trend like this, right? With very little pullbacks, right? So obviously, with everyone buying, all the retail traders, which is not how we trade, right? They're all buying everything, right? So when let's say I'm gonna ask you guys, you know, as an example, right? The market is going up. Right, obviously, some people, you know, they get FOMO, right? The market's going up. They're like, oh, like everyone's making money. The market's only going up. Shit, like I want to get in, right? They're gonna go ahead and enter a long position. Let's say, for example, right here, right? Most people would enter a long position because the market is breaking new highs. A lot of people are buying. You know, everything's going crazy, right? Most of the time, where majority of audio's not good, for real? My MS is at 34. Bro. I think it's good. I don't know. My computer is showing otherwise. I don't know. But I really got to set up this Ethernet, bro. I'm just too lazy. Anyways. Alright. So, guys. Let's say, for example, the market is pushing up like crazy. Right? Like crazy. You know, a whole bunch of buying coming in and everything. Right? Where majority of the retail traders, or literally everyone, when you guys enter a long position, for example, right, and you guys place a stop loss, you're more than likely, where it's kind of common sense, you're more than likely going to put your stop loss at the nearest low where the market bounced from, right? So for example, once again, the market is in a very, very bullish trend. The market is getting bought up like crazy. You know, everything's looking super good, right? Everything's looking super, super good. You're going to go ahead and enter your long position, and you're going to be like, okay, where's my stop loss going to be at? Your stop loss is going to be, most of the time, where buyers stepped in, which is going to be at this low right here. Right now, let me spill something to you guys. All right. So, you guys know I trade with the banks, or not literally with the banks. My concept revolves around trading with the banks, not with retail traders. Right. So when the market is going up, I'm not looking to get in just because the market is going up. I'm gonna wait for a certain thing, just how banks do it, to get in right after. Right. So for example, let's say, for example, you guys enter a long position right here. You place your stop loss right here. What a stop loss is doing in the market is it's creating an open order. Pretty much you telling the market like, hey, if price goes below this price, I want you, the broker, right, to sell my contract over to someone else so I can get rid of it and stop losing money. That's what a stop loss is, right? So what tends to happen is when a lot of traders like us, the retail traders, when we see the market is going up like crazy with a trend, or going down like crazy with a trend, right? What tends to happen is we tend to place our stop loss at a very, very common low, right? So our stop loss can be exactly at the low, a little bit above the low, a little bit below the low, right? What this does, guys, is we're creating a whole bunch of orders, open orders in the market, right? Pretty much saying that hey, we're pretty much telling like okay, you guys know the market, the way the market moves is where there's a seller, there's a buyer, where there's a buyer, there's a seller, right? If we're in a long position and our stop loss is here, right? We're telling the markets, we're telling everyone that, hey, if the markets goes below this level, I want the broker where you guys place your order from to go ahead and sell my position over to someone else. Remember, with as a seller, being us with the stop loss, there's going to be a buyer, which is going to be the banks, right? So obviously, guys, with the markets pushing up like crazy, banks, come on, guys, it's common sense here, right? Like the markets, just because, wait, I lost my train of thought. Okay, yeah. As the market is going up, banks are not going to be buying. That's pretty stupid. I mean, that's not how they make money, right? Banks don't FOMO. That's not how it works, right? So what the banks are going to do before they know that the markets are going to be going up, right? But they want to be buying at the lowest possible price, right? But if you ask yourself like, hey, how can I possibly buy at the lowest price, right? How can banks possibly buy at the lowest price? It's really simple. Wait, so should I buy at a higher low? No, I'm gonna explain to you right now. Right? Like I said, banks they don't want to be buying with you guys. They want to be buying from you guys. So how can they do that? Well, obviously, you guys gotta think of it like this. When you think of a bank trading, I really hope you guys aren't thinking of someone in their office at a Wells Fargo or Chase placing orders in the market. That's not how it works, right? Banks have invested upon billions of dollars into an algorithm. Well, as so we think, right? That's where my concept comes along, right? How do I get the green and red skills to mark TP and stop loss? Oh, you just click this, bro. Long position, and then that's it. Anyways, yeah. So it's a computer-based algorithm which is constantly doing math and is constantly doing everything to be able to identify where the liquidity is in the market. Liquidity being us and our orders, to see where exactly we can manipulate the market to get filled at the lowest price. So let me catch everything up right here. All right, guys. The market's going up. Us, for example, we're like, oh my god, the market's going up. Like, we're gonna keep breaking new highs. It's like we're gonna become millionaires and all that stuff, right? Now, as we're buying this up and we're placing our stop loss at a very common low, right, which is gonna be either drawn liquidity 1 or drawn liquidity 2. We're gonna be, for this example, we're gonna be using the nearest level of liquidity, which is gonna be this one. All right, perfect, right? With us, millions of us up placing millions of orders in the market at a certain level, the algorithm that the banks have invested billions of dollars into, the algorithm is able to read all of these orders and be like, okay, I know exactly where liquidity and everything is lying. I know where everyone has their stop loss, meaning that if the market goes down into the stop loss, everyone is going to sell and we're going to buy it, right? So before the market makes a big move to the upside, banks are going to make sure they manipulate the price to stop everyone out first. Which I'm sure if I asked you guys, like, hey, how many times have you guys gotten stopped out at the complete bottom before the big move up? I'm sure everyone would say, oh, I did. Because you're liquidity. That's how the market moves, right? Banks don't want you to win. They want you in the market, but they don't want you to win. They want you in the market because you're creating orders and they're buying those orders off of you at the lowest possible price. Because obviously, as the market is going up, banks are not going to be buying. Banks want to be buying at the absolute lowest price, right? So before the big move up, for example, right, you guys might notice that you're going to get stopped out, something like this, like price will go straight into your stop loss, exactly where your stop loss is. It stops you out. You sell your orders over to someone. That someone is more than likely going to be the bank, placing billions of dollars, into the market. And then you're going to notice that the market starts shooting all the way back up. This right here, this is known as a deal well sweep. Now, for the people in the premium, you guys might be like, like it might have clicked something because you guys might notice that I'm always saying, oh guys, I'm looking for a liquidity sweep before we see the move up or the move down. This is this, right? So this is known right here as a DOL sweep. So this is DOL, draw on liquidity. That's what it means. So draw on liquidity, right? We're liquidity. Why is that? Because when the market is going up and we're placing our stop loss, we're creating open orders in the market. When a million people or millions of orders are in a set level, that's known as a pool of liquidity. All right. Hopefully, I'm making sense to you guys. I'm trying to talk as slow as possible. If you guys know me, I talk pretty fast, right? So yeah, this is drawn liquidity. When price that being banks, when it takes out drawn liquidity, this is known as a liquidity sweep, where we're getting stopped out at the complete bottom and banks are being filled at the complete bottom for a discounted price. Think of it like that, right? In the meantime, let me catch up with the chat. I'm new. Is this TradingView? Yeah, this is TradingView. Yes, sir. Do banks place shorts to bring the market down? Yeah, bro, banks. Okay, I hope you guys know that if you guys are investing with $1,000, $10,000, maybe even $50,000, you're not making a dent in the market. That money does not move the market. You guys have to understand, like the stock market, this type of game, is meant for banks, hedge funds, the algorithm, institutions, all these people. They're not made for us. We're just liquidity in the market. So you guys gotta learn how to play with the banks. If not, then you guys are gonna be liquidity and always getting stopped out. You guys gotta think of it like that. This game that we're playing right here is not for us. It's meant for banks, right? So yes, banks, they trade with. I hope you guys know trillions of dollars. I'm talking with a T. Trillions of dollars are moved around the markets every single day. And so there's days where the market is choppy, right? So just imagine how much money goes into one single 1 minute, 5 minute, 15 minute, 1 hour candle. Think of how much money goes into that. That's money that we don't have. That's money that banks are using. Billions upon billions of dollars, maybe even millions per candle, right? So when we're putting 10,000, 1,000, or even $100 in the market, we're not even moving a decimal in that candle. You guys got to think of it like that, right? Like I said, this game is meant for banks, it's not meant for us. So we got to learn how to move with the banks, right? And that's where I come along and kind of teach you guys how I use my strategy to kind of trade with the banks and take advantage of retail traders. All right. How do you know which rally cup to take an entry if the trend forms? I'll get to that. Remember, I'm still in step 2 out of the 4-step strategy, right? So we're still in drawn liquidity, right? So let me ask you guys in the chat. It could be a simple thumbs up or a I get it or whatever. But do you guys get the drawn liquidity aspect with the banks, liquidity, stop losses? Do you guys get that? I heard TradingView has an auto for buy and sell. Is that true? Everything does. Yeah, you just set a limit. All right. So a lot of you guys sort of okay. Let me ask you, because I'm seeing a lot of thumbs up and I'm seeing 2 sort ofs, right? And I'm here to help you guys, all right? So you guys ask me what is confusing to you guys, and I'll be sure to review it, all right? So you guys let me know. So give me a question or whatever that's confusing you. I'm not going to move until I answer everyone's question, all right? Put your entries where the masses put their stop loss. Exactly. That's what my strategy consists of. But look, Tony, it's not as easy. Because trust me, if it was that easy, everyone would do it. Right, there's a lot more to just putting your entries where the stop losses are placed at, right? Which is what I'm gonna get to in a minute. Okay. Now let me see. Yes, it makes sense. So when we put our stops unpredictably below the drawn liquidity sweep, well, CD, you gotta understand this. The market is not gonna sweep the drawn liquidity to the cent. Sometimes it's gonna sweep it to the cent. Sometimes it's gonna go right below it. Sometimes it's gonna go 40 points below it before the sweep. We don't know. We can't read that. Only the algorithm knows, because the algorithm is the one manipulating the market to move the price, right? Trust me. If sweeps were that easy to where it will sweep to the perfect cent, my life, I would be a millionaire right now. I really would. But it's not that easy. Sometimes it takes a little bit more reading to it, which is what I'm going to teach you guys. All right. Now let me see. Hold on. I got a notification here. Okay. Okay. So how can we identify seek and destroy stop losses? It's simple. If the market is not moving with the trend, like I said, the number one thing that you guys need in the market is a trend. If you don't have a trend, drawn liquidity won't work, MSS won't work, and fair value gaps won't work, right? So how do you avoid seek and destroy, or how can you identify it? It's simple. If there's no trend in the market, it's seek and destroy. Everyone is getting stopped out. That's why the market doesn't have a trend, right? So when you guys are able to identify seek and destroy type of price, it's as simple as closing your laptop or closing your computer or your phone and go on with your day. It's that simple. Like today, for example. No, actually, no, today wasn't choppy. But when we have choppy markets, you guys will know I don't post anything. I will never give you guys something I don't like. You guys got to understand that part. All right. Let me see. What drives price down to the stop loss if the trend is bullish? Banks. As the market is going up, you guys might be like, oh, like everyone is buying. There's no way in the hell we ever go down. Well, that's where banks step in. They're like, nope. We're the ones with the money. We're going to make price go down. We're going to manipulate the price by sending a bunch of sell orders, right? Driving the price to go down, because remember, it takes millions of dollars to make the price barely even move, right? And that those are billions that banks have, not us, unless you're a millionaire here and we don't know that. But other than that, it's banks, right? And like I said, banks want to buy at the lowest possible price, and that's how they do it, right? They stop you out at the lowest possible price. Like I said, where there's a seller, there's a buyer. Us being the sellers with our stop loss, them being the buyer with the manipulation. Once they bought it at the complete bottom, they're gonna perform something called a liquidity sweep, which is like this, where it barely just hits the bottom of the drawn liquidity, and then they make price go even higher, right? And that's why I said I'm sure everyone in here has gotten stopped out at one point at the complete bottom, and the market just reverses right then and there. Why? Because you were liquidity right there. And I hate to be the one that says it, but it happens to all of us. You know, it's how the market moves. How do you identify where a DOL sweep could be? It could be in any level of liquidity. It could be right here. It could be right here as well. For example, it could be right here, right? It could be in any level of liquidity, any level, right? And that's why you got to be prepared. We don't know where price is going to sweep from, but we could definitely be prepared, right? Which is what I'm going to show you guys with the trade recaps. So just stay tuned for that, all right? But in the meantime, let me see. Do you mind doing a demo run if you can to show what to do and where we shouldn't make mistakes? I don't really have to do a demo run. I can just tell you guys, and I can show you guys. I have everything all journaled down, so don't worry about that. Do we not sell down into drawn liquidity because we don't know when it's going to sweep? Well, we do know when it's going to sweep. It could be off, like I said, it could be off any level of liquidity. How do you identify when it's happening? I'll show you. That's known as an MSS model, right? Which is going to be step 3 of the 4-step strategy. Remember, we already have the trend, and we already have the drawn liquidity sweeps, right? DOL sweeps, same thing, right? So yeah. Let me see. You guys need to be reaction traders once the banks make a move. Obviously, banks, they don't care about you guys. I hope you guys know that the market will never wait for you guys. I don't care if you guys are showering. I don't care if you guys are using the bathroom. I don't care if you guys are cooking. The market, if it wants to move, it's gonna move without you, with or without you. You guys gotta understand that. So you guys gotta be like on the market, you know, with a quick reaction time. The market is not made for slow people. How do you find out where liquidity is located? It's simple. Like I said, let's say for example, the market trend is bearish, right? You're just simply marking out every high that the market makes. If the market trend is bullish, you're just marking out every single low that the market makes, every single pullback, right? And I'll show you that with the trade recaps right after I finish the review. All right, so don't worry about that. I got you. All right, I'm gonna answer literally every single question. All right. Anyways, okay. Let me see. When there's higher volume, that means more orders coming in. Yes. The more volume, obviously, the more money being flowed into the market, which creates more liquidity, right? And that's why you guys might notice I only trade when the market has a ton of volume. I do not like trading slow markets. First of all, it's a lack of liquidity, it's a lack of movement, and your stop loss will probably get stop hunted. So it's not the probability isn't there. The more volume there is, the better your setup is. All right. How do you know when the buying pressure is dying off? You can read the candles. If there's more wicks, lack of buying or anything, that's how it's dying off. It's all about reading the candles. More wicks, more selling. How do you play DOL sweeps instead of waiting after the fact? Okay, let me show you. All right. So okay, guys, we're gonna go over to step 3 out of the 4 steps, right? So far, I'm sure I hope you guys have screenshotted this because I'm about to delete it. But so far we have the trend identified. All right, so I'm gonna put here done. We have number 2, which is DOL. Done. We just covered that literally right now. Number 3, we have MSS. Right? So, you guys might be wondering, what the hell is an MSS? Like, what is that? Alright? So, you guys know, at least for my strategy, for those that do know about my trades and everything that I do, you know, on live and everything, you guys might know that I'm kind of known for calling the top and the bottom of the market. It's what my strategy consists of. Sometimes I trade with the trend, but most of the time, you guys can say I kind of trade against the trend, but I really don't. I'll explain it, right? And this is where step 3 comes along, which is known as an MSS model. Now, what does MSS stand for? Let's start with that, right? So MSS stands for Market Structure Shift, right? In simple terms, or in literally simple terms, what a market structure shift stands for is just the trend of the market switching, right? So if the market is in a bullish trend, we're going to go to a bearish trend. If the market is in a bearish trend, we're going to go over to a bullish trend. You get what I'm saying? Will this be recorded? Yeah, bro, of course. Here. By the way, if you guys want to subscribe or show some love to the YouTube guys, I'll greatly appreciate it. The link is right there. All right, guys? Anyways, so yeah, what an MSS stands for, it's pretty much just a smart word for the trend flipping. That's literally all it is. All right, guys, I'm just going to keep it short with you guys. Anyways, so how are you guys able to identify a market structure shift? What is a good example of a market structure shift, and how can I be able to read it to put my money into it to make money? All right, let's go ahead and get started with that. All right, so let's say, for example, by the way, if you guys want, not record this, take a screenshot of this. I'm about to delete it. I'll give you guys like 5-10 seconds. In the meantime, I'm gonna drink some water while you guys take a screenshot. Appreciate you, Darth. All right, hold on. Okay, got it. All right. Are fair value gaps and inverse value gaps considered liquidity? In a way, yes, but we're using liquidity for an entry. I'll explain to you. I'll explain you that in a second. All right. Anyways, okay. I'm gonna go ahead and delete all of this real quick. Let me delete this. Let me delete this. Okay. So now we're in step 3 out of the 4, right? MSS. Okay. So let's say, for example, this is a good example. We're gonna be going with a. Okay. Matter of fact, let me ask you guys. All right. Do you guys want me to do the example on a bullish trend or bearish trend? They're pretty much the same thing, but just in case you guys might be confused with one another, you guys let me know. All right. Do you guys want a bullish trend or a bearish trend? Both. I mean, they're the same thing. They're really the same thing. I'm seeing bearish. I'm gonna do. Yeah, it's literally the same thing. I don't even know why I'm asking that. All right. But for example, let's do a bearish trend. All right. So let's say here, the market created drawn liquidity. Right. Let's do it like right here. Okay. Let's say that the market sold off. Just imagine this, guys. Imagine this, right? Actually, no. Let me draw it out. Why imagine it when I could just draw it, right? So let's say, for example, the market, it went to the bottom, it sold off, found this exact level of liquidity, and it started bouncing up, and it created a very nice bullish trend, right? Now, you guys see the absolute bottom of this level is, let's say, let me see. Let's say it's 21,454. You guys can see the price right here, right? This right here is known as drawn liquidity, right? So let's say, for example, the market starts reversing, right? The market then, here, let me draw this out, just so I don't confuse you guys, right, real quick, right? So the market sold off. The market found this complete bottom, and it started going back up, right? So this complete bottom is known as a drawn liquidity, right? DOL. Why is this known as drawn liquidity? It's super simple. Why? The market sold off. The market started bouncing back up. People are like, retail traders, they're probably thinking like, hey, okay, this might be the bottom of the market. I'm going to go ahead and place my long position anywhere in this area. And I'm going to place my stop loss typically at the complete bottom of the trend where the market bounced from, right? So think of this right here as a bunch of stop losses being placed in the market. There's a bunch of stop losses just lying here in the market. So far, so good, all right? Now, before the market goes up, right, the market is going to go down, creating a bearish trend. Why is the trend bearish? The reason the trend is bearish, guys, let me see, bearish trend. The reason the trend is bearish is because the market wants to go ahead and take out liquidity, right? Banks know that they want to make the market go even higher. But like I said, banks, they're not going to be buying when the market is going up. They want to be buying at the absolute bottom where the drawn liquidity is lying in the market, the liquidity, right? So we know that the market trend is bearish because the market is creating lower highs and lower lows. The main high, lower high, lower high, lower low, lower low, lower low, right? Now, the market goes into drawn liquidity and it sweeps drawn liquidity, right? So we took out every single stop loss. We got stopped out, banks got filled. Will it be recording? Yes, there is. I'll link it right now, right? Now, what's going on here, guys, is the market takes out liquidity right here. What is this known? Let me ask you guys, what is this known as? What is this known as? Let me see if you guys know, both on the YouTube and on in the chat. DOL sweep, exactly. DOL sweep. Not an MSS just yet, is known as the DOL sweep. The MSS hasn't formed yet, right? This right here, DOL sweep. Perfect, right? Perfect. Okay, so you guys are understanding it. So far, so good. All right. Now, you guys you guys know that the market trend is bearish. The whole reason the market is bearish was to take out liquidity, so banks get filled at the absolute bottom, and to make the market go back up so they can make every single penny count, right? Now, what is the market forming right here after we took out liquidity? What do you guys notice? Do you guys notice more buying, or do you guys notice more selling coming in? I'm gonna give you guys a few seconds to type. More buying, exactly, right? So with more buying stepping in, what's happening here, guys, is the market structure or the trend, it's flipping from bearish to bullish. And why do you guys think I kind of explained to you guys in the beginning of the class that you guys need to understand how you guys are able to find a trend in the market? By looking at lower highs, lower lows, higher lows, right? So what's forming right here, guys? Let me ask you guys, what do you guys think is forming after we took out liquidity? Look at this. Look what I'm marking out. What do you guys think is forming right here? What do you guys think is forming? Exactly, higher lows, right? So exactly how Matt said, an MSS is forming. Why is that? Because the market went from creating, here, let me write it down for you guys, just so you guys don't get confused, right? lower high. Here, let me copy this. Lower high. Um, then we have a lower low right here, right? So the market is in a bearish trend because the market is constantly creating lower highs, lower lows, lower highs, lower lows, and so on, right? Once the market, or banks in this case, took out liquidity, right, and buyers are stepping in, this is where the MSS starts forming because the market goes from creating lower highs and lower lows into higher highs and higher lows, right? So that you guys see what I'm saying here. The trend is flipping, and that's why I told you guys in the beginning of the class to really pay attention. Although it's common sense to be able to identify a trend, you guys need to know the terms behind actually identifying a trend, right? And that goes with higher highs and higher lows, right? So this right here is known as an MSS model, right? A market structure shift. In easy terms, it's known as a trend flip, pretty much. All right. So what's happening here, guys, is the market, like I said, the market is going from making lower highs, lower lows, lower highs, lower lows, into creating the main low, higher high, higher low, higher high, higher low, higher high, right? So yeah, exactly. MSS equals shifting from bearish to bullish. Well, no. It could be bearish to bullish or bullish to bearish. Remember? Yeah, exactly. Vice versa. Yeah. So it's think of it like, guys, it's as simple as the trend flipping from bullish to bearish or bearish to bullish. It's that simple. But that's why I told you guys, you need to make sure that you know exactly how to identify a trend, right? And that's with lower highs, lower lows, higher highs, higher lows. Do you guys get what I'm saying? I might be talking too fast, maybe, whatever. But hopefully that makes sense to you guys, right? That's all a market structure shift is. All right. So now we're practically 90% done with the strategy, or kind of. I kind of still have to explain some things, but just so you guys can get the idea of the strategy. All right. But yeah, we're practically done with the strategy. Now, what's the cherry on top that we're missing? Well, we're missing an entry point. Okay. Now that we know exactly how to read where the market is going to bounce from and where it's going to reverse from, we have to put our money where our mouth is. You know what I mean? Like, we have to play something, right? And that's where step 4 out of 4 comes along, which is going to be the fair value gap. Now, this one, you guys really need to pay attention here because this is where a lot of people get confused, and it's a little bit, like a little bit tricky. All right. So let's go ahead and get started with this. So if you guys want to go ahead and take a screenshot, you guys can do so just like this. Let me send it over in the chat. All right, guys. So, I'm gonna drink some water for 2 seconds. In the meantime, you guys screenshot it, save it, and all that good stuff, or maybe write a question, and I'll be with you guys in a second. Hold on. Okay. So, let's go ahead and get to the hardest part of the strategy, which is not really too hard, but explaining it, in my end, is a little bit hard. All right. So I'm gonna try to make it as simple as I possibly can to have over 135 of you guys, both with YouTube and Discord, understand it. All right. So let's go ahead and get started. How do we find an entry point? Well, it's going to be with a fair value gap, which is what I'm about to explain. All right. So let's go ahead and get started with that. Now I'm going to make a quick a little chart drawing, so you guys can get the perfect understanding of how the market should look, and then we go from there. All right. So here, let me go ahead and do this. Let me see. So guys, give me 1 second. Let me kind of draw this out. All right. So extend to the right, background on. Okay. So let's say, for example, the market is in a bullish trend, right? We're gonna do a bullish trend in this case. All right. So let's say, for example, the market is in a bullish trend. We're constantly pushing up, and there's gonna be times where you guys kind of see a very, very strong candle, right? So, for example, let's say that these candles, they're pretty mediocre, they're pretty small, they're nothing crazy, right? Now you guys are gonna see something like this, where the market could sell off a little bit. So we're gonna make this a red candle. I'm just kind of making out a drawing so you guys can get an idea of a real time market, right? But let's say, for example, the next candle after this red one is a very strong bullish candle that looks somewhat like this, and then the market just continues to do its own thing, like this, and then it just keeps going up pretty slowly and all that stuff. All right, now I'm gonna try to word this as simple as I possibly can. All right, when you guys identify a very big candle in the market, I'm talking, bigger than the rest, right? That is known as an imbalance. So in this case, guys, remember, please pay attention here, all right? Because it's going to be very, very hard to explain, right? So this right here, where the candle usually looks a lot bigger than the rest, the time frame doesn't matter. The time frame doesn't matter with this one, all right? Let's say, for example, it could be the 5 minute. Let's imagine the 5 minute for now, all right? This candle right here is known as an imbalance, right? Imbalance. There you go, right? What is an imbalance in the market? Well, an imbalance is the same thing as a fair value gap. Yeah, but it'll make sense now. All right, let me finish explaining it. Right, pretty much what an imbalance is, guys, is when too much volume went into one candle where there's orders inside of this candle that have not gotten filled. All right, hopefully you guys are catching up with me. Okay, this is an imbalance. The candle is usually, bigger than the rest. So far, so good. Right, there's too much volume in a candle where too much is happening. Right now, when too much is happening, matter of fact, let me ask you guys, how many times have you guys tried trading a very fast market or a very volatile market, and sometimes your orders didn't get filled? This usually tends to happen with a lot of option traders. In the futures market, honestly, you get filled pretty quick, but with options, it's a big deal here. I mean, there's been times where I've gotten, I've missed an entry because the market's moved too fast, right? So you guys get what I'm saying, right? Like you guys place an order in the market and it just didn't get filled. The market just moved way too fast, right? So what tends to happen is you're not alone, right? Just keep this in mind. You guys are not alone here in this candle, right? So when you guys place an order in the market, if the order does not get filled, it turns into an open orders. Yeah, so limit buyers, pretty much. Exactly, right? When you guys put a limit order in the market and it doesn't get filled, it turns into, just an open order in the market, right? Now, if you guys know how to read price action, which I'm not really going to explain too much because that's going to take way too long, but look, guys, price here and price here already got filled. Why? Because these candles already went through the price, right? But there's a gap here. This is where the fair value gap is made, right? So I'm going to put a little candle here just to let you guys know. Wait, let me see, I got a notification. Okay, bet. Right? This is an FVG, also known as a fair value gap, right? So I'm going to put here fair value gap, right? So what a fair value gap is, guys, is a gap where price has not tested yet. And obviously, if price has not tested a certain price in the market, the orders there can't get filled. The open orders. Why? Because the price has not been hit, right? So in this gap that I'm going to mark out for you guys, which goes from the top, the complete top of the first candle and the complete bottom of the third candle, this gap right here, right? And there's going to be a midpoint, right? This gap in between these two lines, right here and right here, you guys can see that there is nothing inside of this candle, right? No orders, no nothing, or no price inside of the candle, right? So think of it, in this gap, there's a bunch of orders waiting to be filled. So I'm going to write here a bunch of orders waiting to be filled, or like just bought or whatever, right? So this pretty much makes it a fair value gap, just like that, right? So first of all, it's an imbalance because too much volume in a candle makes it an imbalance where volume is not balanced, right? Some orders got filled, some orders didn't, right? And then when this final candle closes, it turns into a fair value gap because the orders are still existing inside of this gap and price has not yet tested into it. So let me know if that makes sense. I'm trying to word it as simple as possible, but maybe some of you guys might be getting some confusion here or whatever, right? So let me know if that makes sense. David, you're good at explaining this. So many clicks off my brain. Bro, I love to hear it, bro. Love to hear it. Makes a lot of sense. Okay, perfect. What did they cancel the order? Well, not everyone always cancels the orders. It's it depends. It depends, right? Okay, so let's keep going here. We're still not done. We're still not done, right? So the way a fair value gap works, before I show you guys some examples of my trade recaps, the way a fair value gap works is same. It's kind of the same thing as drawing liquidity. Price, before it keeps going up, is gonna pause for a second, right? Although the trend is bullish, price is gonna pause for a split second or a few minutes. It varies, right? It's gonna go back down, catch up with all the orders that it didn't fill, to go even higher. So the way that would look like, guys, I'm gonna go ahead and delete all of this because it's kind of taking some space here. The way this would look like, guys, would be like this: price goes into the fair value gap, It could be anywhere. It could be the complete top, the middle, the bottom, whatever. Right? In this example, I'm going to do the middle. Right? Price goes into the middle. It fills some, maybe most, maybe all of the orders in the market. And then you guys will notice that price starts bouncing right back up. Just like this. Right? This is known as a fair value gap. Now, I know it's a drawing. It might look a little bit confusing, but don't worry, guys. I'm going to show you guys a million trade recaps that I have, that I've done, that I've traded and made money off of, so you guys can see exactly how this happens in real time. All right? So don't worry about that. But in the meantime, are you guys understanding the drawing? Right? It's pretty much an imbalance is made. There's a gap, a bunch of open orders. Price, before the market goes even higher, it's going to take a split second. It's going to pause. It's going to go down, fill these orders, and go back up. Very clear, perfect. All right, I'm gonna take that as a you guys are understanding it. All right, because I'm not seeing too many questions, so we're good. All right, is this something that banks trade off of? Yes, banks. Yes, everything I'm showing you guys is all based off banks. Because remember, guys, retail traders, we don't really trade retracements into random candles. We trade usually. If you ask a retail trader, it's usually support and resistance breakouts, trendline breakouts. If I ask you guys, the new traders, in most cases, like, hey, what strategy do you trade? Oh, I trade support breakouts or resistance breakouts or supply and demand or trendline breakouts. Those are all retail strats. What we're trading is open order strategies where the banks can really take advantage because the algorithm can read where the stop losses, where some orders haven't been filled, and all that stuff. And that's how we know exactly when the market is going to bounce up, regardless of a support and resistance or supply and demand level. Do you guys get what I'm saying? So yeah, everything I'm teaching you guys, it's all pretty much a bank concept. So do fair value gaps being filled create more fair value gaps from the fast uptrend? Yeah, sometimes, yeah, there could be multiple fair value gaps in one certain area. And yeah, we can get a fair value gap retracement and we create another one right after. And we're probably going to retrace into that one and so on. It's like a domino effect. So yes. Do all fair value gaps get filled? If not, what are some reasons they wouldn't get filled? Okay, no, they don't all get filled, but there's really no reason why they wouldn't get filled. I mean, that part I don't know. It all depends on how price wants to move. If the trend is really bullish, then yeah, they're not gonna get filled all the way. But but here's where by the way, guys, I'm still not done. Right? Because remember, in this strategy, we trade fair value gaps and we trade inverse fair value gaps. So I'm going to draw a really quick example. And I promise you guys, once I finish drawing this, everything is going to click. Alright? So, let's kind of take a few steps back into the strategy. Right? Let's say for example, right guys? The trend is currently bullish. Right? So number one, right? This is I'm about to click everything for you guys. It's all about to make sense. We've been live for 52 minutes. Guys, these 52 minutes have come down to one place. Alright? Watch this. Alright? It's about to make sense for everyone. Alright? So number one, in the strategy, what's the first thing we look for? Matter of fact, let me ask you guys. What is the first thing we look for in the strategy? What is step one? Trend. Okay, perfect. Right? Let me ask you guys one more time. What is the current trend in the market? What you guys are seeing right now, what is the current trend? Is it bullish? Is it bearish? Bullish. Perfect. Right? So the trend is currently bullish. Perfect. Number two, draw on liquidity. Right? This one, obviously, you guys can't answer because it's a drawing. But let's say, for example, draw on liquidity is up here. Right? We just took out draw on liquidity. Right? So the whole reason the trend was bullish was for banks to make the market go up, stop everyone out, and make this go back down. Right? So draw on liquidity, in this case, was up here, for example, right? So I'm going to put a little arrow right here, known as DOL. We just took out DOL, right? What is this known as? A DOL sweep. I have all these lines here. It's making it super hard to draw on it. Let me just move this down. There you go. Okay. So we have a DOL sweep. Why is it a sweep? Well, the trend is bullish. The whole reason the trend was bullish was for the market to take out this drawn liquidity. We took out this drawn liquidity, and now you guys are seeing a sudden shift in the trend where there's a lot more sellers than there were buyers, right? So what is this known as, guys? What is forming right here? What is step 3 of the strategy? An MSS model. So what's forming right here, guys, is an MSS, right? Market structure shift, right? Yeah, like KP said, pay attention because this is where everything clicks. All right, so we have number one, the trend being bullish. The whole reason the trend was bullish was to take out liquidity. So number two, DOL sweep, right? Step 2, we sweep liquidity. That's one and done. Step 3, final confirmation, MSS being formed, right? The market structure is shifting. So we went from having a ton of buyers to all of a sudden having a lot of sellers stepping in. What is this signaling to you guys? The structure in the market is shifting from bullish to bearish because the market took out liquidity above. So everyone that had a stop loss up here, they got stopped out. Banks got filled at the complete top. Now that banks got filled at the complete top, they want to make this go down so they can make every penny count, so they make money. All right. So far, so good. Okay, perfect. Right now, step 4, final step, the cherry on top. Think of it like that. Right. We're gonna be using fair value gaps / IFEG. Right. So in this case, since we have a bullish fair value gap, most of you guys will be like, hey, okay, we have a bullish fair value gap, so I'm going to look for a retracement plus a bounce. But in this case, this bullish fair value gap won't play out in your favor as you think. Let me explain to you guys. All right, think of this gap right here as a buying territory, right? So think of it as like, buyers territory. I think that's how you spell it. I hope so. If not, then you guys let me know, right? But yeah, think of it as a buying territory where buyers usually would step in, because that's how it usually works. But that's if we haven't taken out liquidity above. It's a big if, right? Now, since we took out liquidity above, and the banks, the ones that control the market, since they're not interested in making the market going any higher, right? This buyer territory is not going to be so strong. So the way we get an entry here in the market is we're going to look to inverse this fair value gap, right? So it's going to look like this, right? So the way you guys get the perfect entry, because I'm seeing a lot of you guys are asking like, hey, how do I get a perfect entry? Guys, you look for this fair value gap, the current bullish fair value gap. To get inversed, you take the inverse, you enter shorts like this, right? You put your stop loss anywhere above, like wherever you guys want, right? In this case, I'll do this one, right? And then you target draw on liquidity below. Where's that draw on liquidity at? Well, guys, like I said before, if the market is in a bullish trend, you guys are going to be marking out every single low on that bullish trend as the market is going up, right? So in this case, we're going to mark out draw on liquidity 1 right here. So this will be your PT1, right? You guys know it's a draw on liquidity because the market bounced up, found the pullback, created a higher low, and bounced right back up to create a new higher high, right? So this right here is DOL, right? So we're going to mark this out as DOL just like this. And you guys can see right here, we have the main low, which is where the trend started, which is going to be your PT2, right? So the whole reason the market is going down now, guys, is to go ahead and take out these two levels of liquidity, this one and this one. So what you guys will do here is, no, you guys don't have to wait for a candle close. I typically use a candle breakout, and I just enter off of that, just anticipating the candle close. All right, why not the middle one? I'll explain to you in a second. Right, but when you're inversing it, you're not going to inverse it off the middle. You need to make sure that the entire fair value gap gets closed and gets filled. Right, the way it gets filled is by obviously inversing the fair value gap. Right, so you guys would look to enter anywhere around this range. Right, and then you target PT1 and PT2. That's my entire strategy. I promise you guys, this is my entire strategy. And obviously, I know it might be like, hey, like you drew it, but how does this actually work in a real-time market? Like, I want to see this work in a real-time market. So lucky for you guys, I actually alert everything I do, and I have everything on stream. So what I'm going to do is I'm going to pull up some trade recaps, give you guys a quick rundown on what I saw, why I thought the market was going to go down or up, and you guys are going to see exactly how I entered and how the trade worked out in my favor. All right, guys? So I'm going to go and put that up real quick. All right? So what I'm going to do here is I'm going to go over to my alert channel, and just find I'm gonna close my eyes. All right, matter of fact, let's do it together, right? And make sure my stream is working perfectly. Let me see. Yep, it is. Okay, perfect. Right. So what I'm gonna do here, guys, is I'm gonna go ahead and close my eyes real quick. Right. I'm gonna randomly just scroll up, and I'm gonna explain to you guys the trade that I'm seeing. Right. And I'm gonna show you guys how simple this is and how I'm able to do it every day to stay consistent. All right. So I'm gonna close my eyes. All right. I'm just gonna scroll up. I'm gonna stop in 5, 4, 3, 2, 1. Stop. Okay. So we just landed on a nice shorting position, right? Okay, let's go ahead and kind of explain this short position. All right, let's go ahead and get started. Look how simple this is, guys. So step 1, before I even look at this picture, I'm looking at my second monitor right now. All right, before I look at this picture, the first thing we always look for, or the first thing we always need to identify in the market is the trend. We all know this, right? I literally just covered it, right? We need to be able to identify the trend in the market. So let me go ahead and look at this picture now. Let's open it, right? Obviously, we know that the trend here is extremely bearish. We know that the trend is bearish because the market is constantly creating lower highs and lower lows. We know this because we have the high up here, lower high, lower high, lower high, lower high, lower high, and so on. Right? We also have a lower low, lower low, lower low, and the market's making new lows down here. All right. So the trend, one and done. Step one, done. Step two, identify the liquidity in the market. Right? The liquidity, guys, it's right here. As you guys see, the market sold off, found this bottom, pushed even higher. Right? So when the market is going up, people, retail traders, they're entering the long position and placing their stop loss at this low right here at 20,360. We also have another low, which obviously you guys can't see on the chart, but it is there, right? We have one at 20,343.75, and we also have one at 20,320.75. So now that we know what the trend is, and now that we know if the market wants to go lower, what liquidity the banks want to go ahead and take out, which is going to be our price targets. All we need to do now is, we're not going to look at step 3 because we already have the trend and everything is set up. But now we're going to be using an inverse fair value gap to our advantage. Right? So in this case, you guys see with the trend being bearish and us having a fair value gap right here, what we're going to do is we're going to wait for the market to inverse it. We take a short off the inverse. So once you guys see that the fair value gap is fully closed and we're breaking below the fair value gap, you guys are going to go ahead and enter your short position. Right, so I ended up entering at 20,400, which was just barely below it. All right, now you guys, in this case, you guys kind of already did your job in the market. Now you guys can lay back, maybe lay down in bed or in your chair, whatever you guys are doing, right? And now you just let the market do its job. You already did your part. Now you let the market do its own part, right? So long story short, this trade ends up hitting every single, or almost every single price target, right? Just like this. So we hit PT1, we also hit PT2, and everything. Right? Just like that. Now, there's one thing that I kind of forgot to mention, that I do want to mention for you guys, alright? So, hear me out. Alright, so a lot of you guys might be asking, like, hey, how do I identify if it's actually a fair value gap or just a small candle? Let's go ahead and do this, alright? So, it comes down to one rule, guys, or a few rules, 2 or 3 rules, alright? So, before the strategy is completely done, right, guys? What we're gonna do here is the measuring tool. So if I'm sure everyone in here, literally everyone, uses a ruler. And by the way, I saw your chat. Is there a scenario where you don't inverse? I'll explain that in a second. Yes, there is. I'll explain that to you. All right. How many days should I go back for a drawn liquidity? It does not matter. It could be a 15-year-old drawn liquidity. It could be 10, 1 day, 1 minute. It doesn't matter. It doesn't matter. Always aggressive selling or buying when candles. Yeah, always. Obviously, you can't trade it when the market is choppy. You know what I mean? It's not going to play out in your favor. That goes with every strategy. All right? But okay, guys. So I want you guys to really write this down. It could be in the chat. It could be in your notes. It could be in your journal. It could be in whatever. All right? So what we're going to do here is we're going to write down, okay, fair value gap rules. There's a few rules that you guys should have in a fair value gap. All right? Rule number 1, at least for me. Okay, so before I go on, how many of you guys are trade futures with me? Because if you guys trade options, these rules might not apply to you as much. But if you guys trade futures with me, these rules will apply to you. All right. So how many of you guys trade futures? If you want, just put like a hands up, or thumbs up, or whatever in the chat, so I know how many of you guys actually do futures. Okay, I'm seeing a good amount. Okay, perfect. Okay, now fair value gap rules for future traders. Right. Step 1, or rule number 1. Right. Always make sure, if you're trading NQ, always make sure the fair value, the candle of the imbalance, or the imbalance candle, right? Let me see this. Imbalanced candle is 40 plus points. NQ and 10 plus points, or yeah, 10 plus points. Yes. All right. What do I mean by this? Like you guys might be saying, what the hell is 40 points? What the hell is 10 points? It's super simple. All right. So in the market here, we can see that we have a few imbalances here in the market, right? So we're currently on the 1 hour time frame, right? On the 1 hour time frame, you guys see that we have the average candles, the small choppy candles that we can't really work with, right? And out of nowhere, the market starts selling off like crazy, right? So in this case, we have 2 imbalanced candles. We have this one and this one. Why are these imbalanced candles? Well, from what we can see, these candles seem a lot bigger than the rest, right? We know that, right? I mean, obviously, if you guys have an eye or two, you guys will know that these candles are obviously bigger than the rest, right? But how do you know if these are confirmed to be valid candles? Well, it's really simple. Matter of fact, let me go over to the 5-minute time frame. It's gonna be a lot easier if I do that. So here, let me go over to the 5-minute. Let's go a little bit back into. Let me try to find a fair value gap somewhere. Let me see. Right here, for example. Okay. So okay, let me put the replay right here. I wish I could grab the thing. Let me see. Yeah, no, that's too far. Okay, it's whatever. Anyways, so right here, right, we're currently trading NQ. Right, we're currently trading NQ. Obviously, you guys can see that we have a very nice selling candle, a selling candle that really stands out from the rest, right? I mean, you know, like look at this candle and look at this candle, right? Very, very nice candle, right? The way you guys can confirm if this fair value gap is a valid fair value gap is by grabbing the ruler right here, this ruler. You click it, right? Make sure it's highlighted blue. You're gonna grab the candle from the complete top of the wick to the complete bottom of the wick, like this. If this number right here, the first number that you see, is more than 40 points, you get a check mark for the fair value gap. It's a valid fair value gap. All right, guys. And let me tell you guys, look, what's the saying? Looks might be deceiving or something. I'll explain that in a second. All right. But yeah, right here you guys can see that this candle, this imbalance candle, is a 57.75 point candle. Right. So once again, anything more than 40 points is good to trade. All right. So what you guys are gonna do, the way you guys are gonna mark it out, is by getting your rectangle. By the way, screenshot this, guys. Here, let me put the settings here. Border, turn this off. Middle line. Okay, guys, wait. Take a screenshot of these settings right here. You guys need this for the fair value gap. Yes, it does work on any asset. Yes, sir. Remember, we're trading with the banks. Banks don't just stick to one thing. They trade everything, right? Wait, when does it get too big for a fair value gap? In my opinion, anything more than 150 points in one candle is huge. You know, it will probably work out. I just won't trade it. You know. So yeah. Anyways, guys, take a screenshot of these settings right here. Very, very important. This is for the rectangle. Take a screenshot of this. Very, very important. All right. I'm gonna give you guys like 5 more seconds. You know, maybe you press a button. Okay, we're good. Thank you, Squeezy, bro. Thank you, bro. Anyways, so yeah, now that we know that the fair value gap is the valid fair value gap, all we're gonna do is just mark out the fair value gap. I mean, it's like this. You grab it from the bottom to the top. Boom. Just like that, guys. You have a valid fair value gap. Now, don't get too ahead of yourself just yet. We're missing one last rule for this fair value gap. All right. So I'm gonna go back to the 1 hour so I can get this text over here. I lost it. Okay, here it is. I was about to say. All right, bet. Now we're good. Okay. So rule number 2, final rule, pretty much, right? Final rule, right? And by the way, if it's okay, here we were charting. By the way, just so I can clear myself up, right? NQ is 40 plus points. We charted this on NQ, so anything more than 40 on NQ is valid. On ES, on the other hand, ES doesn't move as much, so obviously you're not gonna get a 40-point candle very often. But anything more than 10 points on ES is valid. So let me go ahead and give you guys a little example here, just in case you guys get confused, right? So let's go ahead and try to find a fair value gap somewhere. Let's say, what's a big candle? Right here, exactly. Okay, right. So when you guys are looking for a fair value gap for my SPY or ES traders out there, I know a lot of you guys like to trade ES, right? How do you find a fair value gap? It's super simple. You look for a candle that definitely looks a lot bigger than the rest, obviously, right here. You know, you get the ruler, you measure from the complete top, the complete bottom to the top. In this case, this one's about 25 points, right? Which is a lot more than usual, but you know, just for the sake of the example, we're gonna be using this one, right? So here you guys see it's a 24-point candle. Like I said, in the rules of the fair value gap on ES, anything more than 10 points, you're good to go. It'll work out. Anything less, don't bother. All right. Now, if it's like 9 points or 39, 38 points, you could use it, but I like to be perfect, so I don't trade anything more than 40 points. All right. So yeah, on ES, one more time, fair value gap, 40 points. ES, 10 points. All right. Same number of points on any asset. That's the thing. There's so many assets that I don't know. So for me, I only trade NQ and ES. So that's why I know how to use these. All right. But if you're trading Tesla, Nvidia, or whatever, you kind of have to do a little bit of studying on your end and kind of be able to identify that. All right. Anyways, guys, rule number 2, right? Rule number 2 is the body of the candle. The way the candle looks is very important, right? You guys could say size matters in trading. in like big time, big time. All right. So when we're looking at these candles, right? Like I said, looks can be deceiving in these candles. All right. So with rule number 2, you guys need to make sure this is all by looking. There's no way to read it, with numbers or whatever. It's all by looking, right? You guys need to make sure that at least 90% of the candle, 90% of the candle is a body. Now, obviously, if you guys don't know what a candle is, then you guys kind of have to backtrack a little bit and learn about that first, right? But for those, which I'm sure is everyone, for those that do know what a candle is, a wick and a candle, yeah, you guys need to make sure that the body of the candle, which is the big box right here, this huge box, is majority of the candle. Now, for example, let's say that we have a 40-point candle, but it looks like this, where 90% of the candle is a wick and 10% of the candle is a body, right? This, let's say for example, not even for example, it is, right? A 41-point candle. Technically, yes, it would be a valid fair value gap, but not really. Why? Because majority of the candle doesn't exist. It's a wick, right? So when you guys are looking for fair value gaps, you guys have to look for 2 things, either 40 or 10 points, depending on what you're trading, and you need to make sure that the body of the candle is 90% of the candle. So when you have a 40-point candle that looks like this, you do not trade it. You do not trade this. I repeat, you do not trade this ever. It's untradeable. You cannot trade it. All right. But when you see a candle that looks like this, on the other hand, where it's not a skinny candle, it's a big candle, yes, you can trade it. So yes, you put a check mark on this one. So one more time, just so you guys know, you don't trade these candles. I don't care if it's 40, 100, a million points, right? If the candle looks like this, where the majority of the candle is a wick, you don't do it. Big no. All right. But if the candle does look like this, yes, you're good to go. All right. And I'm gonna give you guys a few more examples that'll make sense. All right. So you guys are gonna notice the pattern in my trades that I take. That all the candles that I mark out, they're body candles. None of them will ever be wicks. Never. It's not how you trade it. It won't work. All right. So now that I got that out of the way, here, let me copy and paste this over to you guys so you guys can have it over in the chat. Fair value gap rules right there. Let me post it over on YouTube. Right there. All right, perfect. Okay, so let's get back into doing some more trade recaps and get you guys more familiar with the entire strategy and how it works real time to make money. All right, because I'm sure that's why we're all here. We all like money. That's why we're trading. All right. Anyways, so I'm gonna go ahead and close my eyes one more time. Right, I'm not looking. Right, let me make sure. Okay, my mouse is on it. I'm gonna scroll. I'm gonna scroll down and just stop in 3, 2, 1. Now. All right. Okay, so we landed on NQ shorts. Right? Okay, so we took this on and make sure the trade was good. Okay, no, this trade was kind of whatever. It was whatever. Let me redo this. Actually, let me stop with the bullshit. Let me just choose a trade that I like. Let me see. Let's do. I want to do like a big moving trade. Okay, let me do this one. All right. So for those on Discord, someone on YouTube went ahead and asked, "Is there a scenario where you don't take the inverse?" Yes, there is, and I'm about to explain it to you guys right now. All right. So when it comes to taking inverses and to taking regular fair value gaps, it all comes down to one question, right? And I've reviewed this a million times. All right, guys. So look how easy this is. All right. When you guys know the trend, right, and you guys have a setup ready to take and all that stuff, and you don't know if you should take the inverse or a fair value gap retracement, what should you do? It's so simple. You're gonna ask yourself, okay, remember. Write this down, all right, guys? Before you guys take a trade, ask yourself, okay, have we taken out liquidity or do we have room to go lower into liquidity? All right? I'm going to repeat that one more time. Before you guys take a fair value gap trade, right, whether it's an inverse or a retracement, you're going to ask yourself, do we have room to go higher or lower depending on what the trend is? And, if I do, I'm going to take a retracement. If I don't, I'm going to take an inverse, right? So, Viv, in the scenario where I don't trade an inverse fair value gap, here's exactly how I'm going to do it. All right? So, for example, on the 31st of October, we ended up taking NQ shorts at 20,175. And if you look at the picture, you guys might realize that I didn't take any sort of inverse. Why is that? Because I asked myself, before I took the trade, I'm like, okay, do we have room to go lower? In this case, yes, we do. Right? The market sold off like crazy. In this case, you guys might realize, yes, the fair value gap, which is a huge candle, right? Definitely more than 40 points. We created a huge fair value gap right here. And I'm not going to inverse it because the market never took out the nearest level of liquidity, which in this case was lying at 20,143. Do you guys get what I'm saying here? Right? So if we have a fair value gap and we still have the trend here is bearish, right? We still have room to go lower. I'm going to put money into the market going lower because we know where the banks are going to take the inverse or the reversal, right? So what we're going to do here is instead of inversing this fair value gap, which we're not going to because obviously we're not making the market go up, we want the market to go down, we're going to look for a retracement, we're going to wait for a rejection, and then we're going to take shorts, right? So that's why in this setup on the 31st, I ended up taking NQ shorts, and long story short, guys, we hit drawn liquidity. Why is that? Because I asked myself, I'm like, okay, I know what the trend is, I know where drawn liquidity is, have we taken out drawn liquidity? No? Okay, I'm going to take a retracement from the fair value gap to go lower. Long story short, guys, this trade ended up going 50 points in a few minutes. So Viv, that's exactly how I would do it if I don't inverse it. Now, there's going to be a lot of times if you guys follow my trades, you guys might know that I take inverses a lot more than regular fair value gaps. But in the case that we don't take an inverse, this is why and how I would trade it. Now, let me catch up with you guys on the Discord and make sure that you guys are... How do we know it's going to go lower? You got to ask yourself, hey, do we have room to go lower? So I remember what's an inverse? Oh, bro, you gotta rewatch this, bro. Cause that's gonna take way too long to explain. Just rewatch it here, bro. Anyways, but yeah, guys, that's exactly how I would do it. All right. So let me show you guys a case where I would inverse, just in case. All right. So I'm not gonna close my eyes. I'm gonna stop with that bullshit. All right. We're gonna choose a trade that we actually wanted to take here. All right. Let's see. Okay. So we ended up taking right here, for example. Right. We ended up taking NQ shorts. Man, it seems like. Wait, no, we already. Oh yeah, no, I already reviewed this. I was about to say. Okay, let's do this one. Right. Okay. So let's go ahead and be able to identify the trade here. Right. We're gonna use the 4 steps that I broke down to you guys in the last 77 minutes. All right. Makes sense. If there's exactly. If there's more liquidity below, you're just gonna target it. It's that simple. All right. So look, in this case, we ended up taking NQ shorts. Right. And it seems like every trade that I'm taking is NQ shorts. Wow. Okay. Anyways, so in this case, guys, we have drawn liquidity on the 21st. We have drawn liquidity at 20,529. Right. So you guys can see right here, the market trend is very bullish. I mean, it's only buying. Every candle is a green candle. Right, but you guys might notice this candle stands out from the rest because it's a lot bigger than the rest, obviously, right? And it's 40 points big, right? So it's 40 plus points, making it a valid fair value gap. And you guys might realize that in this candle, majority of the candle, I'm talking 90% or more of the candle, is a body candle, making it a valid fair value gap. All right, perfect. Right, this fair value gap is a bullish fair value gap, but you guys might realize that with us having liquidity above, which is at 20,529, right? We took our liquidity and we created a liquidity sweep. All right. By the way, before I go on with the trade, let me see if I have this trade recap or trade commentary, so you guys can see it real time. So this is on the 21st. Let me go all the way up to the 21st. Right here. I think I wrote it down. I could be wrong. Let me see. I did. Okay. So here it is, guys. Right. I'm not gonna read all of this because it's. You know, I was yapping here a lot, but you know, we're not here for that. All right. So in this case, yeah, the market is in a very nice bullish trend. We have liquidity above. So what did I tell everyone? I'm like, okay, guys, with the market going up, we're gonna wait to see 529 get taken out. Once we see 529 to get taken out, we're gonna look to play some downside, right? So here it is, right? So 529. Once again, guys, look at this before it happened, right? We have liquidity up here at 529. Once again, look very carefully. 529 liquidity up here, right? This is the highest point the market went to for the day, right? Which has a lot of liquidity, a lot of stop losses being, waiting to be filled. All right. Now the market went so high up that we took out liquidity. So we have DOL once again right here. We took out liquidity. We're selling off. A sudden shift in the trend, known as an MSS. So right here, guys, we formed a DOL sweep. Right here, we're getting an MSS. Why? Because the market went from creating higher highs and higher lows to creating lower highs and lower lows, right? Obviously, you guys see that the market is selling off big time. Okay, so far so good. I'm sure it's pretty clear. All right, I don't have the chat open, but I'm sure you guys are understanding it, right? So what are we looking for here, guys? All right, so now that we know that banks finally took out the liquidity at the final level at 529, we can go ahead and say, okay, the banks swept liquidity. They want to go ahead and take out liquidity to the downside at 343 and 320. right? So how do we get an entry to go ahead and take shorts into 343? Well, guys, on the way up, the market created a very nice bullish fair value gap. Since obviously we're not bullish, we're going to be looking to inverse this bullish fair value gap. How do we inverse it? We simply just wait for the fair value gap to get filled and we break below it. Once we break below it, we find an entry. We let the market do its job, right? So in this case, guys, on the 21st, we ended up entering NQ shorts at 1045. This is how the chart looked. So obviously you guys see we swept liquidity, we sold off, created the MSS, we inversed this bullish fair value gap right here, right? We broke below it. I'm like, okay guys, I'm gonna go ahead and take some shorts here. I like it, right? Okay, long story short, you lay back, you try to relax, because obviously in trading you really can't relax. It's very stressful, but you try to sit back and relax, right? And you let the market do its thing. Long story short, you scroll down and we hit the price target, 90 points, just like that. All right, so we took the shorts right here. Market goes straight down into drawn liquidity, 343. It's all about reading liquidity and learning how banks move the market. All right, guys, and if you guys skim through all of my trades in any server, if you guys skim through all of my trades, you guys will realize the same exact setup every single time. I wait for drawn liquidity, I wait for a sweep, I wait for an MSS, and I wait for an inverse. Once I get the inverse, I get in, I lay back, and I just let the market do its thing. So let me see in the chat. Is it making sense, guys? Did it make sense? Let me know. And by the way, for the YouTube as well, is that one on the 15-minute or 5-minute? I'm pretty sure it was off the 5-minute. Good stuff. Yeah. Do you ever take regular fair value gaps? Not very often, but when I have to, I will. Yeah, I will. Just not as often. Didn't understand drawn liquidity, but you made this easy. But okay, here, if anything, here, let me make this a lot easier for you, bro. Give me 1 second. And that goes for everyone, right? So if you guys didn't understand the drawn liquidity part, because I know it could get a little bit confusing, I have the video just for you guys right here that I made myself. Okay. Oh, I meant before. Okay, well, in general, if you guys didn't understand drawn liquidity, that video can help you out. Thank you, Viv. Thank you. Can we use a 3-minute chart for fair value gaps? Yeah, but I would suggest a 5-minute. It's honestly a little bit better, in my opinion. A little bit better. I'm gonna be honest with you guys. But yeah. And other than that, guys, that's my strategy. I broke down everything I possibly could. So yeah, and by the way, guys, before you guys get off, I know you guys, all that stuff. If you guys want to show some love, you can always show some love by subscribing. The recording is here if anything. And bro, the Mike Tyson fight is gonna start soon, and I gotta get ready, so I can't be here for too long. But hopefully you guys understood everything with the strategy, how I trade, and all that stuff. And by the way, guys, I do everything live on my YouTube. I do classes on my YouTube. So if you guys ever want to subscribe and show some love, guys, here's the link. You guys can do everything from there. All right, guys, it'll mean the world to me. All right, but let me see. When there's two, okay. Before we end it, let me catch up with some questions. Maybe you guys might be confused or need some, clarification or whatever. I think that's the word. So yeah, let me catch up with the questions. All right. Viv, I got you, Viv. I got you. All right. So here, let me catch up with the questions. All right. Hold on, guys. You guys are typing too fast here. Hold on. Let me see. Okay. So when there's two liquidity areas, is it not risky to set yours to the lower one than the higher one? Why not TP at the higher one, if that makes sense? Okay. So are you saying something like this? Let me make a drawing. So we're talking. Let's do something like this, background green. Okay, so let's say the market trend is bullish, right? Here, let me make this candle a little bit like this. We created a fair value gap here, and then we created another fair value gap right here. Is that what you're trying to say? Like when there's two fair value gaps in the same spot? Is that what you're asking? Thanks. I got you guys. Yeah, I got you. So yeah, like I said, there's gonna be times where there's two fair value gaps in one. Oh, bro, you're not even adding me, bro. You're adding an impersonator, bro. That is not me, bro. Hold on. Let me see. Do you actually trade against the trend if the setup is there? Yeah. I mean, that's practically my strategy. It's not trading against the trend. It's just catching the top or the bottom. Think of it like that. We're not trading against it. We're just timing the market. But anyways, so when there's times, let me put this on the side. When there's times when the market has two fair value gaps in a row, you guys, it depends, right? So if you're looking for retracement, meaning that we have liquidity above that's higher, for example, let's say that we want to take out liquidity right here, right? And we get like a small retracement. You guys would typically look to retrace into the nearest fair value gap, right? So I'm talking something like this, right? So there's two cases here, right? There's this one where you guys will retrace into the midpoint of the first one, right? And then you expect another bounce into liquidity above, like this, right? But if you guys are going to inverse something, so let's say, for example, we took out liquidity, right? So let's say, for example, we took it out right here, right? Instead of, before you guys inverse this fair value gap, you're going to make sure that both fair value gap gets filled, always. So once again, if you guys are going to look for a retracement plus a bounce or a rejection, you're going to look to take it off the first fair value gaps, which are the two fair values, this one and this one. For example, it's just an example, right? Do you only take a trade if the fair value is 40 plus points? Yes, only 40 plus points. But yeah, now for a retracement, you guys will take the nearest fair value gap. For a reversal or an inverse, you guys will take when both fair value gaps get inversed, right? So instead of inversing it off this one, you would inverse it off the last one, which will be this one, right? And why do I say inverse the last one? The reason I say this, guys, is because if you look to inverse this one and we go down a little bit more, you're gonna have the risk of possibly bouncing off the next fair value gap, which might stop you out. So it's a lot safer if you guys inverse both of them before you get the entry. You get what I'm saying? So you don't have to worry about, oh, like if I short it now, there's going to be another fair value gap and I might get stopped out if it bounces, all that stuff, right? So yeah, if you're going to look to inverse two fair value gaps, make sure the final one gets inversed before you take the shorts or the longs, you know, depending on what it is. Make sense? Perfect. Yeah, so maybe that's a question that you guys might have had. When do we take a trade when the fair value gap is 10 plus points? That's on ES. That's if you're trading ES. Remember, so 40 plus points is NQ, 10 plus points is ES. Remember that. All right? Remember that part. Gotcha? Perfect. What's Seek and Destroy? Seek and Destroy is when the markets are very choppy, meaning there is no trend in the market, there is nothing in the market, right? The market is not going up nor going down, right? What that tends to do is when the market is trading in a range like this, for example. Let me see. When the market is trading in a range that looks like this, right? This is Seek and Destroy type of price. Why do I say that? Because if you go, let's say, for example, you guys went long right here, you're getting stopped out. If you took shorts, you're getting stopped out. If you took longs, you're getting stopped out, right? So price is seeking stop losses and destroying everyone in a position. So you guys can't, like trading the chop is a little bit hard. Of course, there's strategies out there that you probably could, but is it the smartest thing? It depends how you manage your risk, you know? I'm aware you normally aim for a 25-point stop loss, but how do you normally decide where to put yours? Well, simple. So typically my stop losses are always placed at 25 points, right? So wherever you enter, you use this tool right here, right? You use this tool and you look at the stop loss, you look at the point. You just set it all the way down to 25 points, and just like that, you have your stop loss at 21,344. So anytime I place a stop loss, I'm always using it based off this. What's your risk reward ratio? Well, it varies. Typically I don't take anything less than a 1 to 2 risk reward. But it could vary. I mean, if a trade wants to move a lot, it could be a 1, 2, 3, 4, 5, you know. It varies. I can't really give you that answer. But I will never take anything that's a 1 to 1 or a 1 to 0 point something. It's always going to be a minimum of a 1 to 2, meaning I'm risking to lose 100 to make 200, right? So, you know, you're doubling what you're risking. That's the whole point of trading. Are those the tools on TradingView? Yeah. Yep. It's what I always use. Oh, okay, that's for him. Okay. And by the way, does anyone have any questions on funded accounts? I've been seeing a lot of you guys in the chat asking about funded, or anything like that. You guys let me know. I'm the one that kind of trades funded in the server. So yeah, you guys can always ask me about that. By the way, if you guys do want to use a funded account or anything, you guys can go ahead and use this right here. Alright, this could help you out. If you guys want to get 80% off any funded account on Apex, that is my suggested firm as always. You guys know I am in love with Apex. I love them. Right, so if you guys ever want to buy a funded account with 80% off, use code Blastoise. It will give you guys the 80% off. Alright, guys? Let me see. How many days does Apex give you to pass the account? No time limit. It could take you a month, a day, a week, a year, a decade. You know, what's the code? Code Blastoise. Like this. Code Blastoise. Alright, so if you guys ever need a funded account, take a screenshot of this picture right here, or of this message, and you guys can get it. Alright, guys? What's your honest opinion on Webull? Best broker out there for options. I love Webull. Now, if you guys are doing Robinhood, let me tell you guys, get the hell away from Robinhood. It's the worst broker out there. It sucks. Right? So if you guys are on Robinhood, take this as a sign, get away. right? Webull is the best one out there. I love Webull. If you guys are doing options, Webull. If you guys are doing futures, do Tradevate. How do I pass a funded account? Well, you gotta make money on it. That's pretty much how you pass it. You make money on it. But yeah. And as always, guys, if you guys ever have any questions on any funded accounts or anything, you guys can always shoot me a DM or at me in the server. Like, hey, how do I do this, or how do I set it up? I will guide you guys through it. You guys know I'm the one to ask for funded accounts. I'm always on them. On your first funded, are you able to get a payout? Yeah, of course. That's the whole point of it. What's the best firm? Preferably one letting you hold. Well, market make your entries. I hope you know this, but no one in the world, not even banks, can trade from 5 p.m. to 6 p.m. That's when the market is closed. So yeah, there's no firm or anyone out there that will ever let you do that. It's not possible. But for the best firm, in my opinion, okay, I have 3 firms, right? Look, guys, I'm gonna be completely honest with you. Don't use any other firm other than these 3, right? I'm sure you guys have seen the whole scandal behind, let's say, for example, Fast Track Trading. We're talking TGR's firm. Guys, why are you guys using these firms when there's secure ones out there? Like, come on, let's be smart here. I don't care if your favorite trader is TGR. Just use a secure firm, right? Yeah, there's a whole bunch of shit going on with denials of payouts. We're not here for that, right? Trading is hard as shit, and you guys not getting paid out is a whole other headache, right? So we're gonna avoid that by using the top firms in the world. We're talking Apex and TopStep. You guys do not need any other firm. These 2 firms are here to stay, all right? And I'm not here getting paid for by anyone. I'm not here getting paid by anyone like to say, oh yeah, say my firm. No, I'm literally telling you guys, because someone in my server, they went ahead and got scammed, or not scammed, but they got rug pulled. I'm sure a lot of you guys did as well with fast track trading. They rug pulled everyone. They shut down the firm. Now we have a whole nother drama with TGR's firm because he's not paying anyone out. Guys, don't use these random ass firms when you have better ones out there, like Apex and TopStep and MFF. Yeah, that one works too. But I suggest Apex and TopStep. Alright? Come on, guys, let's think here. Let's make our brains actually work here. Stop using these random ass firms just because your favorite content creator just made it, right? He's probably gonna rug pull you for money, right? Because that's currently what's going on. Let's use the ones that have been out here for 12 years, for example, TopStep, or 4 years, Apex, with barely any denials or anything. All right, so let's be smart here. It's exactly, yeah. You can't mix content creator with firms. That's not how it works. All right, guys. What do you think about TGR's bootcamp? Oh, I don't know. I don't know. I've never watched it. I don't have time for that. Too busy. If I make 4K on a 50K account, will I get a payout? Yeah. I mean, you'll get the money. Yeah. You get $2,000 out of that because the most you can request is 2K for the first 6 payouts. Do you recommend using a funded or for beginners, or start with my own capital? Okay, good question. In my opinion, I always recommend start with paper trading so you don't risk any money, and you move on to prop firms. Guys, prop firms are, in my opinion, a blessing. Like, it's heaven sent. You're making money by trading without your money. Like, you know what I'm saying? Like, if you lose money, you're not losing money. But if you make money, you're making money. You know what I mean? So yeah, now in my opinion, yeah, so my top 3 is Apex being number 1. I love Apex, a bunch of tax benefits, and you can make a lot of money from the payouts. TopStep being my second one, and MFFU being my third one. Now, I've never really used MFFU, but I have heard a lot of good stuff about it, and you know, I've done my research. MFF is very good. But guys, if we're talking about fast track trading, TGR's firm, I don't know, some random firm out there, we're not using them. All right. You guys are going to make a promise with me. We're not going to use these random ass firms because we're not going to get rug pulled. It's been happening too much, and I don't want you guys to go through that. Alright? Remember, trading is hard enough as is already. Making money with trading is hard as shit already. Right? So we're not going to be wasting our time with these content creator type of firms. Right? No, we're going to be using Apex, TopStep, MFFU. Nothing more. Nothing more. Alright? Because I don't want you guys getting scammed. So I'll write it down for you guys. Alright? So number 1, Apex Trader Funding. Number 2, TopStep. And number 3, MFF. Nothing more. Okay, guys? Nothing more. Anyways, let me see here. What is psychology? Price continues to move in the direction it's headed. After it goes to fair value gap, how do the orders winning not change the price direction? I don't know what you mean by that. Wait, which are the requirements for a payout on Apex? Here, let me send it to you. Give me 1 second. Payout rules right here. But yeah, I don't get your question there. My bad. Okay, here it is. Here you go. What about Fund the Next? Bro, I have never heard of Fund the Next, bro. Do your research. Please do your research. I've never heard of that firm. And I'm really big on firms. Like, I do my research on everyone that you guys always tell me. I've never heard of that one. Be careful. How do you do your taxes as a successful trader? Well, and this is why I suggest you guys Apex. So with Apex, it's gonna be a little bit of a boring topic. You guys need to know this. All right. There's a few things that you guys need for taxes when you guys are using prop firms. First of all, you guys need to know you do not get taxed on capital gains. Why? Because you're using a prop firm. You're trading a simulated account. The account is not real. You're not making real money, right? The way you get paid is through a 1099. So you're getting paid a salary from Apex. All right. So you're getting paid. You're pretty much just doing your taxes based on your tax bracket. So if you guys are making 300K a year, you're probably gonna pay 30% of your taxes, etc. Right? That's why I always tell you guys, do Apex. Right? Now with Apex, they have a feature where you guys can register your account under an LLC. Meaning that anything that you guys buy with, let's say for example, you guys bought a funded account, you guys passed the funded account, you guys paid for the PA fee, right? Yes, it does. Apex is one, if not the only one out there that allows you to trade under an LLC. Topstep doesn't let you do it, and I don't think MFF lets you do it, and that's a huge disadvantage. Why? Because you could do everything under your LLC. Why wouldn't you? Right? And on top of that, guys, what was I gonna say? Fuck, I forgot. Oh my, I forgot. So we did. Oh yeah, write-offs. You can write off everything that you guys pay for, like 100% of everything on Apex. So if you bought an account with my code, you know, if you guys want to use code Blastoise for the 80% off, you guys can write that off. So you can write off like $30 per account. All right. So once again, here's the link if you guys ever need it. But just so you guys are a little bit educated on that, yes. You can write off the eval, you can write off the activation fee, right? So one eval varies from like $25 up to like 40, 45, right? Per account. You guys can have a maximum of 20 accounts open at a time, right? By the way, you can also copy trade that. What are activation fees? Okay, so for those that don't know, with Apex, you buy an account, right? It's gonna be super, pretty cheap with an 80% off. Code Blasters, by the way, low plug here, right? Code Blasters 80% off. You're gonna get it for like $30, $32 around there. All right, you can write that $32 off. Now, when you pass the account, because remember you're in the evaluation phase when you first buy it, right? When you pass the account, they're gonna be like, okay, to activate the account, you have to pay us. Right now, I think they have a discount going on for $85 per activation. But if it's not, there's gonna be like $160 if I'm not mistaken, right? Between the $30 and the $160 that you guys pay per account, or 85, I'm pretty sure it's 85 right now, you can write both of those off, right, under your LLC. So realistically, you're gonna pay that money regardless. So you're kind of investing it into your business. Until are you? Yes, I am. For me personally, yeah, I'm under an S corp, but it depends on what you guys are on. Can I open an account with Apex in Europe? Yes, you can. Yes, Apex allows international trading. They pay you out through. I'm sure you guys are familiar with this. For the people out there, what's it called, through Plane. It's like a wiring website. So yeah, anytime if you guys ever get a payout from Apex, you guys open an account through Plane, they send you the money there and it hits your bank account. So yeah, you can trade from Italy or Europe or US or wherever. You know what I mean? So yeah, that's why I suggest Apex as well. How do they make money if it's simulated? Okay, really good question. Let's go ahead and kind of break this down. All right, so this discount that they're doing, 80% off, it's always they always have 80% off on the accounts. All right, the way this works is a marketing strategy. They make the accounts really cheap, right? With the accounts being very cheap, people are like, hey, these accounts are so cheap, I'm just gonna full port every account until I pass one. Why? Because I'm paying $30 per account. I have money, so I don't care. I'm gonna blow through it, right? They keep failing accounts. They keep failing accounts. They keep failing accounts. Where's that money going to? Into Apex pockets, right? Eventually, they're gonna pass that account, right? When they pass the account, they gotta pay an extra activation fee to Apex. But just like any bad habit that you guys create, if you guys are constantly full porting every single account, right, you're more than likely gonna full port your PA account and blow it just like the other 100 accounts that you guys blew on an eval account, right? And what happens to Apex? They made $40 from the eval, and they're also making $160 from the activation fee, right? So that's all money going into Apex. Now, if you're a good trader, Apex will reward you with the money they make from the losing traders by paying you out with that money. So yes, although it's simulated money, you're still gonna get paid. It's a win-win for both parties. Either you know how to trade or you don't know. You're gonna lose money whether it's a prop firm or not. You know what I mean? So yeah, let's not full port. You know, it's not the thing. So they make money from people losing. Yeah, it's how it works. And it's why a lot of prop firms out there, they go broke because they get all the good traders. Now with Apex, like I said, it's a marketing strategy. Apex makes the accounts very cheap. I'm talking the like a price of a meal. Well, depending on where you guys live. You know, if you guys are in the US, yeah, like $30 for one meal. It's pretty normal here. But yeah, you're paying the price of one meal for one account. It's super cheap. So I'm like, okay, I don't care about it. It's only $30. I'm gonna full port and I'm gonna blow the account. That's what happens. Is it not a one-time payment? Yeah, per account. Per account. So not in total. But yeah. Save receipts, always, guys. It's a no-brainer, guys. Come on now. That save receipts for everything, especially for Apex. You know what I mean? So yeah, with Apex, not Top Step, not MFF. From what I know, with Apex, if you guys know how to trade and you guys are making a lot of money, you will have a huge tax advantage. Like, because you're not paying capital gains, you're paying your tax bracket, right? And you know, I mean, it's just a write-off for everything. It's a win-win for everything. So yeah, here, let me put this link one more time. I'm gonna keep putting here. I'm just new to taxes and making real money. Bro, you're good. If anything, bro, you can always ask me. Alright? Is it a monthly fee? No, it's only a monthly fee for the eval. Once you guys pass the account, it will say, okay, you're gonna pay a one-time fee. That's it. You're done. Alright? So yeah, it's per month for the eval. Once you pass it, that's it. You're done. You're done. So using your code is a discount on the monthly fee every month. Yes, it's a permanent code for the monthly fee. Now, I'm gonna be completely honest with you guys. These accounts shouldn't take you a month to these accounts shouldn't take you a month to pass. I mean, it's you only have to make $2,000. Just make a good risk management thing, and you should be able to pass in like a week or two. It shouldn't take you a month, but if it does, then you know, go at your own pace. But you gotta watch the fight. But I was about to say like what? Okay, let me catch up with the chat. At one point, do you suggest moving from paper trading to prop firms? Once you feel comfortable and once you have a strategy that you're finding consistency in. Obviously, don't go into prop firms if you have no idea how to buy or sell. That's the stupidest thing ever. You know, like once you're familiar with the firm or with the broker, you have a strategy that's working out in your favor, like you're seeing a little bit of green, then yeah, move over to prop firms and you should be good. Let me see something right here. Okay. But getting payouts from Apex isn't hard. People say they got their payouts rejected. Well, those same people also won't tell you that they broke the rules to Apex. You guys know. Same with every other firm. Every firm has rules on what to do and what not to do. Obviously, if you break the rules, they're not going to give you money. Right? So obviously, yeah, a lot of people like to complain. A lot of people get butthurt because they're like, hey, I made money, but I didn't make it correctly. So obviously, they're going to reject it. But yes, from me, I've been using Apex for the last year and a half. I've never in my life gotten a payout rejected. Never. Obviously, the people that gamble in full port, they're going to get it rejected because, you know, obviously they're not going to pay you for gambling. They want to pay actual traders, not gamblers. So yeah. So is this stream basically since we're done? Yeah. I mean, if you guys want to call it, yeah, go ahead. 100%. I'm just answering some questions about prop firms and, you know, maybe the strategy or whatever. So basically, paper trading, funded account, live account. Yes. So paper trading to practice, funded account to make money. Once you make money, you put it into a live account and you make money from there. Obviously, if you guys can't pass a funded account, why do you ever think, like, in what world do you guys think you guys are going to pass a real account? Let's think here. If you can't pass a test account, a test phase, an eval, how in the world are you going to pass, are you going to make money on a real account? Think. Alright? So, number one, yes, paper trading. You start with paper trading, go to funded, get one payout, get two payouts, get that money from the payout, put it into a live account. You keep making money from there on out. Alright? Full or static Apex plan, I personally prefer the full always. I love the 50k full accounts. That is my suggestion always. Tradeovate. Don't do Rhythmic, do Tradeovate. I love full accounts. Does your strategy work well with Asia? Nothing works in Asia, bro. That thing is slow as hell, bro. I only do New York session. But I mean, yeah, it would work ideally. It's just gonna be very, very slow, very slow. So be careful with that. Are there any prop firms for options? No, not that I know of. And before you guys say, Arctic Funding, it's another firm that's a scam. It's a piece of shit firm. Don't don't do that. All right. So yeah, no. From what I know, there is no options prop firms. All right. Does a 40-point fair value gap candle rule apply to only the 5-minute time frame? It applies to the 5-minute and 15-minute. Obviously, the higher the time frame, I'm assuming you're also expecting bigger candles. That's the whole point of a higher time frame. All right. But yeah, on the 5 and 15-minute time frame, you're gonna expect 40-point candles. On the 1 hour, you would expect something like 60, maybe more. You know, the bigger the time frame, the bigger the candle. Think of it like that. All right. So yeah, a 40-point candle or 40-point fair value gap on the 1 hour won't work as good as it were to if it was on the 5-minute. Is there a reason they don't? I'm not sure. At that part, I don't know. What's the stop loss rule on Apex? Okay, when you go on the website, right here, on this website, you're gonna scroll down where it says trailing threshold. That's the most you guys can lose on that account. So it will be like this, for example. So if you guys look at my screen share, you guys go all the way down. Let's go to Tradevate right here. So say for example, you guys are gonna buy a 100K account. The trading threshold is $3,000. That's a sneaky way to name it. Yeah, yeah, no, but it's 3,000. So it varies on the account. Obviously, the smarter the account, the less you can lose. But you know, is 10K enough to start trading futures? Yes, bro, more than enough. Now, make sure you know what you're doing, because I don't want you to be one of the people that lose $10,000 because you're just starting off. Remember, start with paper trading, go to prop firms, then go to a live account. Those 3 things is all you need. Any general trading advice, discipline, and mentality? Learn how to lose. Learn how to lose. I always tell this to all my students: learn how to lose. Always. It's the best thing you could do. And it goes in any business. If you guys, I know maybe one of you guys maybe in here, or a few guys might be business owners, or you know, might own a clothing brand, or you know, learn how to lose. In trading, you guys need to lose to learn. If not, you can't learn from your mistakes. All right. What's up, also? What's going on, bro? But yeah, and by the way, learn how to be patient. Learn how to accept the fact that the market won't always give you an opportunity every day, right? You guys don't need to force trades every day. You guys don't need to make money every day. All right, that's not how the market works. If not, you're gonna be, you're gonna be losing a lot. All right, so take that into account. Hey David, can you explain the 30% consistency rule? Yeah, you just don't make more than 30% of the account. Here, if you need this can guide you. Give me 1 second. This right here can guide you. Right here, bro. Let me kind of reply to your message. Okay, super helpful streams. I got you, bro. I got you, guys. By the way, I'm gonna try to do these a lot more. I don't know how busy I'm gonna get, but I'm gonna try to do this a lot more so you guys can actually learn trading with me, or not with me, from me. My bad. But yeah, the last time I did a class like this, guys, was like 2 months ago, 3 months ago. So it's been a while. You know, it feels good to be back. But yeah, sounds like you have a stuffy nose. Nah, not really. But thank you, bro. Thank you for checking in. If I were to get a 50K account, at what point would you consider taking a payout? Do it as soon as possible. That's the whole point of a firm. So if you can request a payout like ASAP, do it ASAP. These accounts aren't meant to be held. These accounts are made to make money, and that's it. You let go of them. What happens if I make more money? Then you're running a risk of getting your payout denied. Okay, what tax advantages do the Apex tax advantages apply to Canadians? Yes, sir. Well, obviously, depending on where you live, the tax bracket, that could be a little bit different. You know, so if you make set amount of money with Apex, I might have to pay less taxes than you because, you know what I mean? Like, you know what I'm saying? So yeah, it all depends on your tax bracket. For the rest, yeah, you can do write-offs, you can do everything, so you'll be good. Yeah. But it's important to know that because not many people talk about that, and it's very important because obviously when it comes time to pay, you know, it's a big deal. You know, so it's always good to have that person that, you know, help you out there. It's a game changer when it comes to picking your firms. Bro, take it from someone that's been in the prop firm game for a while. Apex is the one to go. Trust me. Just take my word for it. Like, take my word. Apex is the one to go with. Blasters, if you trade on a lower time frame, like the 1 minute, like the 1 minute time frame, what size of the fair value gap do you go for? Okay, on the 1 minute, you could go for like 25-point candles, maybe 30. On the 5 minute, do 40. On the 15 minute, do 40. On the 30 minute, you could do like 50. On the 1 hour, you could do like 60. Just the smaller the time frame, the less you expect. The bigger the time frame, the more you expect. Think of it like that. Oh, so by the way, I hope you know you're not adding me. You know, you're adding some random guy. Let me see. Taxes only matter if you're making money, which is a good problem to have. Always. Always. But you never know. I mean, if you really become good at trading, that's something that you guys need to know. I mean, you know, it's just something that's important. I'm not a U.S. citizen. Can I still trade with Apex in Europe? Yes, you can. Yes, sir, you can. Yep. And the way you guys will get payouts is through a website called Plane. I don't know if you guys are familiar with it, you know, through wiring and all that stuff. But yeah, they send international money through a website called Plane. Okay. But yeah, you can trade in Europe with Apex. Yes, they allow it. So if you make more than 780 a day on a 50K account, your payout will get rejected. Not always, but you're running a risk of it. Now, if you made like 781, then obviously not. You know, if you make like 800, you're not gonna get it denied. But if you made like 2,000 in a day, then yeah, you're gonna get it denied. You know what I mean? So try not to like cross that barrier. All right. But let me see, bro. We've been in this class for 2 hours. Oh my, jeez. Damn. What's the difference between a full and a static account? A full account has a trailing threshold, and a static account has a frozen threshold, right? Meaning a frozen drawdown. Now, the problem with a frozen drawdown, although it sounds very nice, right, it's not so pretty because when you first start the account, you can only lose $600 compared to a full account where you can lose up to $2,000 to $3,000 in the total account. So think of it like that. You have a lot more breathing room in a full account, and I much rather have that. Got it. There's so much info, 2 hours from, bro, that's what I'm saying, bro. It does not feel like 2 hours. When am I doing another class? I'm gonna try to do one next week. No promises, but I'm gonna try to do one on Monday. Alright? I know you guys really appreciate these. Because honestly, it's what I would have wanted when I first started trading. And all that stuff. Let me know, I'm gonna book my schedule. I always do 4. I always do 4 p.m. EST. Always. Always. So whenever you hear me doing a class, it will always be 4 p.m. Of course, bro. I got you, man. I got you. Yeah, I got you. What about Monday? What is Monday gonna be about? I'm not gonna lie to you, bro. I kind of just go with the flow. You know what I mean? Like, I don't prepare. I just get on. I'm like, okay, guys, we're gonna cover this, and then I just go on on about that. You know what I mean? So yeah, I don't really do topics. I just go with the flow, pretty much. But yeah, honestly, it seems like you guys are pretty caught up on the questions. Now, I don't know if you guys are going to watch the fight with Mike Tyson, but I got to get ready for that because it's going to start very soon, and I got to drive far as shit. So, what is money? Okay, bro. I'll go with Apex. Yeah, no, here. If anything, here. Once again, guys, I know I keep putting this, the link out, but it's just so I can put my, my code out there. You know, if you guys ever need 80% off or anything, code Blastoise. Alright, guys? Code Blastoise, BLASTOISE, will get you 80% off. Alright, with that Apex link. Mike winning? I don't know, bro. That's just rigged, bro. I already know it. I'm not gonna be surprised, like, at all. Thank you, man. I'm learning and looking forward to your future classes. Enjoy the fight. Hey, thank you, bro. Appreciate you, man. If anything, guys, by the way, my DMs are always open. If you guys ever need anything, like, if you guys ever need help with something, or, you know, like, it's like, hey, I don't understand this, you guys hit you know, get my DM, and I will help you guys. I always reach through my DMs every night. Although I get hundreds of them a day, I will make sure I answer every single one of them. Okay, guys? So if you guys ever need anything, you guys can always rely on me to answer. Okay? Can you link the YouTube again? Yeah, of course, bro. Of course, of course. Here you go, bro. Here you go. There you go, bro. If you guys ever, you know, if you guys want to subscribe, show some love or anything, I would greatly appreciate it if you guys subscribe to the YouTube channel. That's where I do live trading and my classes there, alright? Is opening up an LLC with Apex optional? Yes. You could do personal account or LLC account. All they ask you for is the tax ID. You put it there and you're good. Alright? What app is the best to start day trading? Okay. Write this down. TradingView. If you're going to do options, do Webull. If you're going to do futures, do Tradeovate. Alright? Here, I'm going to write it for you. So, options, Webull, futures, Tradeovate, and then must have trading view. There you go. So those are the apps. When you typically go live, at 10 a.m. EST every single day is when I live trading. Is when I do live trading. Will the recording be on Discord too? Yeah. Here, the recording is right here. I have everything recorded like as you speak. Here it is. Done. Thank you, bro. Guys, I really appreciate it. Thank you. It means the world to me, actually. Oh wait. Do you have to have it? Yes, you have to have an LLC before you go. Well, you can always make a second account, but you kind of have to restart the whole process that you made and blah blah blah. You know. But how do you have an S corp if you can only sign up as an LLC? Well, you just put your tax ID. It doesn't matter what LLC you have. You just put the tax ID. They ask for it. They like when it comes to signing up, they'll ask you everything there. Appreciate it. Hey, I got you, bro. I got you. 100%. David, do you know if Colombia is eligible for Apex? Yes, it should be. Yeah, I'm pretty sure it is. Like, really sure. But eventually you do switch. Wait, what? But eventually you do switch to Apex when you get funded. Yeah, no, Apex is what we use for the accounts. They provide the accounts. Remember, Apex is the prop firm. We use Tradeovate to place orders in the market. All right. It better be because that's where you're on vacation. Bro. Got it? Perfect. Got it. Okay. So yeah, guys. I've said I'm gonna call it a class like 4 times now, and I haven't closed it because you guys keep asking. And here's another question. Okay. From a 50K account, I can only lose 2K. Yeah, you can only lose 2,500 if I'm not mistaken. Yep, 2,500. 2.5K. This class gonna be recorded? Yes, sir. Here it is. Let me see. Did you say you go live every day? Yes, in the YouTube. Yes, sir. Yes, sir. For futures, how long did it take for you to go from paper trading to funded? Okay. For me personally, I started with options and I did options for 3 years, so I kind of had the experience in the market. So when I went over to futures, I kind of got the hang of it very quick. But that's me. You know what I mean? Everyone learns at a different pace. So just stay in your own lane, bro, and you'll get it. You know what I mean? You'll get it. Why don't you do options anymore? It is not stable. Now, take it with a grain of salt. That's me. I don't like options. With Greeks, theta, and all that shit, bro, it's like, come on. Like, the whole point of trading is for you to get paid for your decision. If you read the chart right, but you timed it wrong, and theta is going to fuck up your contracts, what's the point of doing it? I'd much rather do futures with no theta and get paid for the chart either going up or down without having to worry about contract decay. You know what I mean? So, like I said, take it with a grain of salt. I personally don't like options, and take it from me, you know, like I did options for 3 years. I don't like it. I don't like it. It's not stable. Like, yeah, you can make a pretty penny here and there, but stable and long term to make a living off of it, I'm very good on futures. Do you pay yearly taxes? No, I do every quarter. So 4 taxes, 4 tax reports a year. Good stream, bro. Hey, thank you, bro. Thank you. If anything, I'll be back on Monday. Hopefully. No promises yet, but I'll see if my schedule is free for a class on Monday. Alright, guys. But yeah, okay, I'm going to close the chat because you guys keep asking questions and I keep getting distracted. Alright, so let me close the chat. Okay, so guys, I'm going to go ahead and call it a class for today, guys. Hopefully you guys learned my strategy. I'm going to post a recording for you guys and link it over. And yeah, hopefully we can run one on Monday. Okay, guys? Alright, I'm gonna go watch the fight now, and hopefully, you know, I think you guys are too. It's pretty famous. It's a pretty well-known fight. Alright, guys? But yeah, I'll see you guys on Monday then. Alright, guys? Peace out, guys. Peace. Take it easy. Have a good weekend and stay safe. Alright, guys? Peace out. And for YouTube, guys, thank you so much for sticking by. Guys, make sure you guys subscribe. Give the video a like if you guys learned something new. I would really appreciate it. But yeah, guys, I'll see you guys on Monday as well. Alright, guys? Peace out.